Hello, I'm Debi Peverill, and you're listening to the weekly tip from Painless Financial Training Group. Today I'm talking about the Coping with COVID checklist, which I talked about last week, but enough has changed that it's worthy of talking about again. So first of all, most filing deadlines are pushed back. Personal income taxes that would have been due April 30th are not due till June 1st this year. And if you owe money, you don't have to pay it until September 1st, and there won't be any penalty or interest on that. I would still recommend that you file your income tax returns, particularly if you get HST credits or the child tax benefit, because the benefits that come out for starting in July of 2020 are based on your 2019 tax return. So the sooner you get that in, the better. CRA is pretty busy with all their other programs, so you don't want to leave the processing of your tax return too late. Corporate income taxes, any returns that would have been due between March 18th and May 31st are all now due on June 1st. And again, payment doesn't have to be made for that until September 1st of 2020, and no interest or penalties will be charged. No corporate installments have to be paid for March, April, May, June, July, and August, but they'll all be due on September 1st. Personal installments don't have to be paid for March 15th or for June 15th. And again, that will mean that they're all due on September 1st. HST registrants, people who collect HST and have to send it in, you should still file your HST returns on time, but you don't have to pay until later. So quarterly filers, people who have HST returns that are due for the time period January 1st to March 31st, that return is due normally on the end of April. And of course, you should file at the end of April, but you don't have to pay until June 30th. If you file monthly, the HST you collected in February, March, and April is not due until June 30th. Annual filers with returns that are due in March, April, or May have until June 30th to pay. Let's talk about the employers. There's quite a bit of change there to the subsidies. There are two wage subsidies available. Lots of confusion around this. The 10% subsidy is available to almost anyone, anybody who's an employer. The 75% subsidy is only available to people whose revenue has decreased by more than 30% year over year, 2019 to 2020. So let's talk about the 10% one first. It's called the Temporary Wage Subsidy, or the TWS. This subsidy, again, is available to anybody: Canadian-controlled private corporations, charities, not-for-profits, individual employers. So if you're not incorporated but you've hired somebody, this subsidy is good for you, and for partnerships. So this legislation is actually law. It was part of Bill C-13, so it's actually available now, the subsidy. We know how it works. So what you have to do is calculate 10% of your gross pay and deduct that amount from the income tax part of your source deductions. So source deductions are the EI, CPP, and income tax you collect from your employees. Plus, of course, you have to match CPP, and you have to send in 1.4 times the EI that you withhold. So to get the benefit of this subsidy, you calculate 10% of your gross and subtract it from the income tax. So the example I have on my website, peverill.ca, where you can see the written version of what you're hearing here. The example is that you have $7,000 in gross pay for the pay that you made after March 15th. And you can therefore have a 10% subsidy on that, which is $700. So if you owed $400 for EI, $1,200 for CPP, and $1,500 for tax before subsidy, that's a total of $3,100. You're going to subtract the $700 from the tax withheld number, and then only send the Receiver General $2,400. That's a total of $3,100 less the $700 for the TWS. And for those of you that want the journal entry, you're going to debit your withholding liability account, the one where you put the tax you withheld from your employees, probably something called income tax payable, for the $700, and you're going to credit a revenue account that you're now going to create called Temporary Wage Subsidy, or TWS if you don't want to type a lot of words. You may not reduce your EI and CPP payment that you send in for your source deductions, only the tax part. There is a limit. It is $1,375 per employee and an overall limit of $25,000 per employer. In the fine print, you need to have a business number and an employer account to take the subsidy. If your taxable capital is over $15 million, you do not qualify for the TWS. If your corporation is a member of an associated group, then you're only eligible for the the portion of the small business limit that you were allocated. Basically, if either of these things apply to you, your taxable capital is over $15 million, or you're a member of associated group, seek competent professional advice. The second subsidy, the 75%, hasn't been legislated yet. It hasn't been passed, so there's changes probably coming. What we do know is that it's called the Canada Emergency Wage Subsidy, or the CEWS, and it's going to apply to anybody whose revenue has decreased by 30%. So the first claiming period is from March 15th to April 11th, 2020. So the example for that, you're going to compare your revenue from March 15th to April 11th, 2019 to your revenue for the same period in 2020. So let's say the 2019 revenue was $75,000. Your revenue for 2020 is only $50,000, a $25,000 decrease. You divide the $25,000 by the 2019 revenue to get a reduction of 33%. So because of that, you would be entitled to the rebate, which I should call a subsidy, and that is 75% of the wages that you've paid in that time period. Now, this subsidy has to be applied for through your My Business account with CRA. You can't deduct it from your source deductions, of course, because it's too much to be deducted from your source deductions. There is a limit of $847 for each employee, but there's no overall employer limit. So right now, it would apply to the wages you were paying at March 15th. So if you gave anybody a raise after March 15th, the portion of the raise, you don't get 75% subsidy on that. If you hire somebody new, however, you get the subsidy on their pay. The amount that you are claiming for the 10% subsidy, the TEWS, of course, is subtracted from the CEWS. So you can't apply for this. Stay tuned. They hope to have this up and running in the next few weeks, so we'll have more to say about that. For employees, the Canadian Emergency Response Benefit, CERB, which we're calling CERB, is going to give $2,000 per month to pretty much anybody who can't work because of COVID-19, even if you don't qualify to get EI. The application takes place through your MyCRA account, which if you haven't got set up, you should soon, or by calling 1-800-959-2019. If your birthday is January, February, or March, you can apply on April 6th. If your birthday is April, May, or June, you can apply on April 7th or later. If your birthday is in July, August, or September, you apply on April 8th. And if your birthday is October, November, or December, you can apply on April 9th. If you've already applied for EI, then there's nothing else for you to do. It appears that the CERB is replacing the normal EI for this 16-week time period, and regular EI will start after that if you're still eligible or still unemployed. If you receive any income from employment or self-employment, then you're not eligible for CERB. That's a very important point. You cannot do any amount of work while you're receiving CERB. Okay, business owners, if you need financing due to economic hardships caused by COVID-19, then there's another acronym, the Canada Emergency Business Account, the CEBA, that will be of help to you. You have to contact your own bank, but the program is supposed to provide you with $40,000 in interest-free loans. Your business will qualify if you had payroll in 2019 of between $50,000 and $1 million. If you have a trust and it was due the end of March, usually, it is now due the beginning of May 1st. Charity returns aren't due till the end of December. And a couple things you don't have to apply for, but you should know about. The GST credit is going up by $290 per person. The enhanced child benefit is a one-time payment of $300 per child, which will be paid in May. No application. And no payments of principal or interest need to be made between March 30th of 2020 and September 30th on student loans. So that is the audio version of what's on our website, peverill.ca. If you want the written version, you should go there. We also have a list of links that are being updated frequently on our page, so you could check that out. Thank you. We'll talk to you next week with new changes.